The landscape of buying a home has evolved significantly, particularly in the state of Florida, as we enter 2025. Whether you're a first time homebuyer or a seasoned property owner, the process can feel daunting without expert guidance. That's where partnering with a professional realtor becomes invaluable. Let's dive into the new rules of home buying in 2025, highlighting 5 key steps to help you navigate the market with confidence and to be a smart home shopper. Hi, my name is Realtor Laura Dis, and I'm with Q Boutique Specialty Realty in Lake Mary, Florida. Today, we're going to set you up for success when you are ready to purchase your new home. So please like this video if you find this information helpful, and feel free to easily schedule a call with me online at qboutiquerealty.com. Step 1, gathering documents to apply for a mortgage loan. Buying a home begins with understanding your financial readiness, which includes qualifying for a mortgage. Getting prepared now to make sure you meet the criteria for a mortgage will not only save you time, but will allow you to find the right loan that meets your specific situation. Maybe you're a self-employed business owner. Maybe you have limited down payment cash. Maybe you sold your home or inherited some money and would love to have a lower monthly payment. Or maybe you're a doctor and have considerable medical student loan debt that blows out the standard debt ratio requirements. Maybe you want to buy land and build your own home. I'm here to tell you there are tons of mortgage programs for these specific situations. A great realtor will be able to point you in the right direction to help you buy a home. Typically, most lenders will ask you for a couple of things. They're going to ask for permission to pull your credit report. You can apply with several different lenders within a 30-day period, and it will only impact your credit score one time as one hard inquiry, which will typically reduce your credit score by 2 to 3 points for each hard inquiry. No matter how many lenders you apply with, this will only affect you one time in 30 days. Most lenders will also require a minimum credit score of 680, but some go down to 560 depending on the loan. It's best now to work on improving your credit score by paying your bills on time, reducing the amount of outstanding balances, and request increases in your available credit lines. Don't make any new large purchases while you're in the process of getting a mortgage. Also, don't deposit cash into your bank account. Lenders want to see where your income comes from and what you pay out, so just keep that cash to pay movers or go to the bank and get a money order to use it to make a payment on an outstanding debt that you owe. Lenders will ask you to provide 2 months of employment check stubs and 2 months of bank statements. You'll also need to show a 2-year consistent job history in the same field. Sometimes this can be waived if you have an employment contract that you can provide to the lender. You'll also need to provide the last 2 years of filed income tax returns or an extension, but these will need to be filed to approve your mortgage, so just go ahead and take care of this now. Unfortunately, if you've filed bankruptcy, had a foreclosure, or a short sale within the past 4 years, this will disqualify you from being approved. Your debt ratio is important. These are the amount of bills that you have to pay each month versus the amount of money that you make each month. Most loans require that your monthly debt be below 38% of your income. So now's the time to tighten your belt, reduce excessive spending so you can get approved to buy your new home. Your monthly and annual income also play a crucial role in your affordability. So maybe you're a dual income household, or maybe you get periodic bonuses or child support income. Lenders want to see that you have 3 to 4 times of your monthly household expenses to determine how much home you can afford. And this doesn't just have to be from a job. This can be Social Security or disability income, veterans benefits, alimony, dividends, and child support payments. There are several different kinds of mortgages available to best suit your specific needs. So if one lender says no or tells you you only qualify for peanuts, keep shopping with other lenders to find the right program for your situation. There are loan down payment options such as an FHA loan with 3.5% down, and even conventional loans go down to 5%. There are some free down payment assistance programs for homebuyers that have not owned a home in the past 3 years, offering up to $10,000 for down payment assistance. There are even a few zero down payment loan options for military veterans with honorable discharge. You can buy a place in the country with a rural USDA loan and enjoy your dream of homestead on a few acres with your own livestock, horses, and growing farm fresh produce. There's also specialty loans for doctors, dentists, and veterinarians with high medical student debt that allows for zero down payment financing on home purchases up to $1 million. Your realtor should be able to connect you with trusted loan officers and recommend comparing rates and fees across traditional banks, credit unions, and mortgage brokers. And remember, the lowest interest rate doesn't always equate to the cheapest loan. Your realtor will guide you to the best fit for your personal needs. Key point number 2, income and home affordability. Understanding your budget is essential for a smooth home buying experience. Here's a simplified approach. Your income should be 3 to 4 times of your monthly expenses. For example, if you plan to pay $2,500 a month, your income should range anywhere between $7,500 and $10,000 a month, depending on your other expenses like car payments or credit card debt. Housing affordability includes more than just your mortgage payment. In Florida, where homeowners often pay for insurance, property taxes, HOA fees, and community development district fees, your mortgage is only part of the equation. Typically, your mortgage will account for about half of your total housing expense. So if you qualify for a $4,000 monthly mortgage, but prefer a $2,500 housing expense so you can stay for vacations or investments, make this clear to your lender and realtor upfront. A professional realtor should be able to help you find a qualified lender that can help balance your budget with your goals and avoid getting overextended. Key point number 3, total housing expenses versus mortgage approval amount. One of the most critical aspects of buying a home is reconciling what the bank says you can afford with really what you're comfortable paying. Banks may approve you for way more than you need or want. When calculating your housing expenses, you need to consider a few things. Your mortgage payment, which is your principal and interest, property taxes, homeowners insurance, HOA, and CDD fees. For example, a $2,000 monthly mortgage could easily balloon to $3,000 or $3,500 a month once taxes and other fees are included. So work with your realtor to figure out what kind of homes you should be shopping for in this price range. This way, you can make the right choices without sacrificing your other life priorities. So, new laws regarding your buyer brokerage agreement. The National Association of Realtors put a new law in effect as a result of a landmark ruling regarding real estate transactions by the Supreme Court. Buyers will now need to formally hire their agent by signing a buyer brokerage agreement before even looking at homes together. This new law is meant to be a consumer protection and provide transparency around real estate commission payments. Before August 17, 2024, sellers typically paid the buyer's agent commission fee when an agent brought a qualified home buyer to purchase their home. Some home sellers felt they were being forced to pay a realtor commission to an agent they didn't even hire and that didn't represent them. The Supreme Court agreed, and so now home buyers are responsible for formally hiring their buyer's agent that's going to represent them in their home purchase, and they're also going to be responsible for paying their buyer's agent commission fees upon closing a successful purchase. Real estate commissions have always been negotiable, and every professional has their own price and levels of service provided to their clients. This new law allows buyers and agents to negotiate the terms of their professional agreement the same way a seller signs a listing agreement and hires an agent to market and sell their home. Here's what you need to know. The buyer brokerage agreement outlines the terms of service, such as the start and end date, the commission fees, any retainer deposits, cancellation fees, and any requirements of the buyer, like you must obtain a mortgage pre-approval letter. It also sets out the expectations about the location, the price range, and the type of property the buyer wants to consider. Realtors cannot show buyers homes without having a written brokerage agreement and being formally hired by the home buyer. The Realtor Association has enforced very strict fines and penalties against realtors unable to provide evidence of a buyer brokerage agreement. No agent is going to risk thousands of dollars in fines, suspensions, and lawsuits because you don't want to commit to hiring them to represent you professionally. One of the cool parts about this deal is that buyers can negotiate for the seller to pay their buyer's agent commission in the purchase contract. Many sellers still continue to offer buyer agent commissions, and buyers can request these fees to be included in the purchase contract, so don't worry. Why is this critical? The seller's agent represents the seller's interest, not the buyer's interest. So without a buyer's agent, you risk overpaying, missing critical inspection deadlines, or losing out on repair negotiations. Your realtor acts as your advocate, protecting your best interest from start to finish. When you hire a professional, you gain a trusted partner to guide you through negotiations, inspections, and all the complexities within a contract. Also, you can tell your buyer's agent you don't want to even look at homes that don't offer seller-paid buyer's agent commissions, much like telling your agent you don't want to see homes with an HOA or a CDD fee. Number 5, the biggest change will be for buyers wanting to view homes for sale. Buyers are now required to sign a buyer brokerage agreement with a realtor before even viewing any homes for sale. While this might seem like an additional step, it really offers several advantages. You need to have a consultation with your buyer's agent to get the best service. Signing an agreement ensures your realtor prioritizes serving you and can streamline properties that fit your criteria. This sets clear expectations. You get a chance to interview your agent and share your goals, timelines, and clarify any concerns up front, which will in turn reduce frustration and lack of communication down the road. Your agent is your best advocate to protect you and fight for you, and you should want to know about your professional's experience and how they work, and make sure you feel comfortable, as this is a partnership based on mutual respect and professional boundaries. You're going to get tailored guidance. Realtors with formal agreements are better equipped to offer strategic advice to you about how to leverage the market and negotiate individual properties. When choosing a realtor, you need to ask these questions, and I'll tell you why. Are you a full-time agent, or do you have another job? Availability is crucial in this fast-moving market. Finding out your agent is unavailable to meet inspectors or show homes on your day off because they have another job is entirely unacceptable. Ask, how long have you been a realtor, and how many homes have you sold? Experience matters. There's nothing wrong with hiring a newer agent, but if they've only sold 2 to 3 homes, trust me, they still need help completing the contracts, and they don't have the situational experience to keep a sale moving forward in the face of challenges that an experienced agent would know how to work around. And be honest. Ask them, what happens if I'm unhappy with your performance, or if I decide I want to work with someone else? Clarify the cancellation process, any fees you're required to pay, and feel free to ask to speak to their broker about these policies. You are not threatening them, you're being a smart consumer and making sure you aren't held hostage with someone you can't work with. Start with agents that are recommended by friends, family, and coworkers. Do some research online, not just look on social media posts. Hiring an experienced expert like me ensures your questions are answered, your concerns are addressed, and we can successfully overcome any speed bumps along the way in your home buying. The role of a professional realtor navigating the 2025 housing market requires more than just online searches, Zillow reviews, and social media skits. A professional realtor will provide local market expertise and sales statistics. They know neighborhood trends and property values, and their personal experiences selling in specific locations can provide valuable insight that you can't find online. Your agent will manage a streamlined process from helping you with your pre-approval, targeting the right locations, setting up homes to see, submitting offers, negotiating incentives, and ensuring your final walkthrough before closing is on time and your repairs have been completed. A professional realtor is like the conductor of an orchestra, coordinating between lenders, title companies, inspectors, appraisers, repairmen, and coordinating with the listing agent to make sure you hit all your deadlines on time and that your deposit is protected and you get keys on the closing day. Your realtor ensures you get the best deal while protecting your goals and your best interest. If you have questions or are ready to take the first step, please schedule a consultation with me, Realtor Laura Dis, on my website, qboutiquerealty.com. You can also call me at 407-863-7965. Please like and share this video with anyone you know that's thinking about buying a new place in 2025, and leave me a comment about what topic I should cover next week. Thanks for tuning in, and thanks for watching my video. Wishing you all the success in 2025.